Hey, Ollie.
Awesome. Nice to have you guys on. I hit record on the Loom like a minute ago. And I'm glad to have you both on the same call because I've respected, Elizabeth for a long time in terms of general startups, like 500 startups and whatnot. And then Ali, recently, we bumped into each other in Mexico City in an emerging market, which is great. We're like washing our hands in the bathroom, like, hey, I know you, because we had talked in like April. But I'm sure you guys have done deals together. Is that true?
Yeah.
Very cool. Very cool. Well, the topic of discussion today is international VC. I want to dig in because I think there is like simple and complex and like non-obvious and obvious. And this kind of hits a range of simple but non-obvious. And in terms of, but in my opinion. So why don't we level set, guys? And for the audience, go ahead and introduce yourselves. Elizabeth, you want to jump in first?
Sure. So I'm Elizabeth Yin, and I'm a co-founder and general partner at Hustle Fund. We invest at what I call pre-seed, so super early, 2 people in a garage type of stage. We invest globally. About 1/3 of our deals right now are outside of the United States, largely in emerging markets.
Thanks. Ali?
I'm Jamal, founding partner of First Check Ventures. Also focus on pre-seed investments. About 75% of our investments are outside the U.S. More than half are in Latin America. So really trying to focus on building the best VC firm for emerging markets.
Yeah. So Elizabeth, you've kind of been in the game with your own fund for 4 or 5 years now. What's the time horizon on that?
Yeah, 5 years.
5 years. And when did this strategy come into play for you? And what was the catalyst? Was it a defining moment, or was it several moments in a row that told you, hey, we should look at these emerging markets?
Well, prior to Hustle Fund, I'd been investing for quite a while and also ran the accelerator program at 500 startups before for almost 3 years. And so they actually really opened my eyes to investing internationally. They were investing a ton internationally, I think even before most people were even thinking about it. So, and I just actually thought it was really interesting that actually a lot of their best companies were international companies. People don't often realize it because those companies then often start a headquarters in the US or something, and then all of a sudden they're called US companies. So that was sort of my first introduction into an international investing. And so from day one at Hustle Fund, we have been investing internationally. I think the biggest stumbling point for us as a fund actually is less about conviction in certain geographies, but more about some of the paperwork that we have to go through in the US in order to invest internationally.
Got it. And then what about you, Ali? I think, well, you have a background operating in this space. I think you're head of growth at Rappi. And what was the other company you're at that was non-US based, high growth?
Yeah, I was head of growth and performance marketing at PayClip, which is a Mexican unicorn as well. So I was, comfortable with kind of engaging in these markets, and living here, had friends here, had people that were starting startups here. I just started also getting approached for advice. And so I was just seeing really great early deal flow in these markets. And so it became easier to kind of start to make decisions to invest and to build up a portfolio. And, I just felt like when I compared it to the problems that I saw being solved in the U.S., the problems that were being solved in emerging markets just seemed more real, and that there's more kind of market demand. And that was what was really exciting. Like, I want to put my money into things that are going to make people's lives better. And I wasn't seeing that as much out of the companies I saw in the U.S.
Yeah, I'm not sure that, dog vet, remote Zoom vet appointments can change someone's life, even though it could for a dog owner for sure. But it seems like the things that we're used to experiencing and enjoying here in the U.S. That are perhaps old, maybe 5 years ago, they need there now. Can you talk about, like, categorically, each of you, what interests you the most? I know you guys do a lot of fintech. Maybe you can touch on that.
Yeah, I think I'll go first. So I think the way I tend to think about things, and we see this certainly in the US, is like categorically, I think there's an order of operations. So first you need a strong fintech layer, right? You need to be able to process online payments. You need, to be able to initiate loans and stuff like that. And so that all has to be digitized and online first. And then once you have that layer, then all these consumer companies can transact and do business, whether it's e-commerce or marketplaces or whatever. And then after that, then you can have B2B. And the reason why for this last ordering makes sense is when you look at the top B2B companies in the US, a lot of them did their customer acquisition by selling to other startups, which is really interesting. I think if you try to sell into old stodgy businesses, the sales cycle is super low or super long rather. And so I really believe that this general projection of like fintech to consumer to B2B makes sense in most geographies. Mm-hmm. And so depending on the country and where they are in that life cycle, that is what we look at. I think for many emerging markets, fintech is still being worked out. Like in some countries that are, earlier in their life cycle on this, like they're still literally running around with bags of money. Yeah. Others do have digital payments, but then don't necessarily have underwriting for loans or whatever else. So we take it country by country.
Got it. Ollie, would you add to that?
I mean, I think that was actually almost exactly what I would say. I would just maybe add that, fintech is also like the biggest glaring need in a lot of these markets as well. Like, when you're traveling in Mexico, when you're traveling in Brazil or Colombia or Vietnam, right? Like it's hard to do anything that involves finance. Trying to set up a bank account, trying to buy a car, trying to like any of these things that you need as in everyday life, it's just a bit challenging. And so, I think solving some of these basic needs, especially, moving more towards the base of the pyramid, can really open up these economies. And I think that's where it gets really exciting, that now these people have a place to store their money or to transact. Then, obviously they could go and start, looking at buying more things and keeping the money flowing throughout the ecosystem. So I think that all these things start to flow together. And then I think the other thing I would add is that I think, tech in general has this opportunity to explode these marketplaces in a really great way. And when we're seeing the countries that are adapting more towards tech, they're also kind of modernizing and growing their GDP much faster. And so I think that to me is really exciting that we have that ability to help these different markets accelerate and move forward 5 years or 10 years in some of these things very quickly.
Yeah, I personally had a light bulb moment 3 years ago where my reaction was, well, my parents, their emerging market was China. And what's left in the world, Southeast Asia, Latin America, Africa, etc. And I started recruiting out of a place like Nigeria and Kenya, and I started to notice how supple the talent pool was. In your guys' investing circles, were there times where the reaction was, oh, that seems sketchy, or did you have to be a bit contrarian? But there has to be a balancing act of this is contrarian, but here's why it makes sense. And once you get past the knee-jerk reaction or toxic stereotypes like Nigerian princes or whatever the fuck people say, how do you rebuttal some of the what are the criticisms, and B, what are the rebuttals that you guys feel like broken record saying?
I think so. It is funny because I think there is this stereotype that it's harder to trust people in other geographies that you are not familiar with. But I've invested in over 700 companies at this point in my career and have seen over 40,000 deals. And I can tell you that I have been defrauded by plenty of Americans here in the U.S. who have no criminal background. So I think you just kind of, build that into your model. Like, yes, you are going to be defrauded sometimes. When you do enough deals, that's going to happen. Yeah. The good news is actually on the 700 deals, I would say that's probably happened certainly less than 5% of the time. But it gets built into your model. And then the second thing is, well, how do you try to, find trustworthy people if you're not actually on the ground? And that's sort of the other learning. I mean, there's certainly even people I know, people whom I would have thought were trustworthy in the US and actually turned out not to be. So I think my general perspective is you just don't know. So what I'm looking for is do I believe, especially going in early, there's not a whole lot of money that I'm putting in anyway. So if anybody were to commit fraud, they're not running away with loads of money. So they're actually less incentivized to do so. So do I actually believe that they are serious about running this business as indicated by their actions in executing on the business. So I think that actually is a pretty good filter for, do they actually believe that if this business does really well, that is actually the easier way to make money than to try to commit fraud.
That's a good one. Ali, would you echo any of that?
Yeah, I think a lot of it. I think the other thing I would add is, for the longest time, it wasn't even just emerging markets, right? But you had big name VCs saying, "Oh, if you're not in San Francisco, you're not a real tech company, or you're not a real venture capitalist."
That was only 3 years ago, by the way. Yeah,
that's pretty. That's where everything's happening, right? And I think that has evolved. One, I think especially now post pandemic, but even I think before the pandemic, we were seeing big companies emerge in these different markets, and now we have more and more talent that has learned what it's like to be successful, whether that's in Asia with companies like Gojek and Grab, in Latin America with companies like Nubank and Rappi, Africa, you have Jumia. Right? We're starting to have these examples of what it means to scale and what it means to grow. And I think people are getting more comfortable because they are seeing these unicorns emerge. So whereas 10 years ago, people were like, oh, innovation only happens in the Valley, and if you're not in the Valley, nothing's going to happen. I think that bias is slowly going away, and we're seeing that amazing companies can be built anywhere.
Yeah, I'm seeing like on the macro level too, from a culture perspective and a tech perspective. In Web3, you saw amazing teams built out of, say, Romania with 1inch. That app, that entire platform was built on Telegram with a bunch of Romanian engineers, or Polygon, a bunch of Indian engineers. And that tech is scaling on a world scale, and we're finally seeing that. On the cultural front, we're finally seeing that at any given time, 5% of the Billboard Hot 100 in terms of music is not in English, but we still like the music. And then in COVID, we saw Squid Games and all these K-dramas become top 10 on Netflix. And so I think that's the right context for this stuff to accelerate. I wanted to get to a two-pronged question, kind of one on the founder side and one on the investor side, by way of metaphor. Like one of my favorite restaurants in SF, they have a sister restaurant started by an ex-chef at the restaurant I love. And I love that one even more. And so like the analogy there is like the alumni from successful companies in the region usually are like worth looking at. So on the founder side, if you don't come from that alumni, let's just say you're in Colombia and you weren't, Venezuela, and you're not from Yummy. I think you guys are both in Yummy. Congratulations. If you're not from Yummy, how can they stick out to an investor like you? And that's on the founder side. And on the investor side, this speaks to some alpha, because if you find top level talent in that region, but they didn't come from a Yummy, the other investors might dismiss them. So it might be a vector of alpha for you. So like how would you assess both, or one individually if one comes to mind?
Yeah. I mean, I think in general at Hustle Fund, we don't really weight pedigree, or so to speak. So what company you came from, or whether you're YC or, went to MIT or whatever. We try to assess kind of based on what people are actually doing or what they've done before. And I think not just skill set, but also, are they the right fit for the kind of business they're starting? Like, do they actually have any knowledge or background in this area? Yeah. So that's kind of what we look at just in general. I would say, though, it ends up that in emerging markets, the people who tend to bubble up and at least find us as American investors is like, they're the folks who are already sort of online, tapped into startup ecosystems online. And those do tend to be people who read English. Those do tend to be people who are working at one of these marquee startups from before, or a Rocket Internet in some cases. Mm-hmm. So it ends up that actually we tend to invest a lot in those teams just simply because they find us. We're not on the ground hunting because we don't have presence in many of these countries. And that's just kind of how the cookie crumbles. But I would not be averse to somebody who does not have that background. It's just right now, especially with the language barrier, that tends not to happen.
Got it. Unlikely. Ali?
Yeah. So I think working in one of these marquee startups or going to one of these great schools is definitely nice to have, because it's kind of helped to provide some level of roadmap or guidance in your education, both kind of corporate education or work education or formal education. So it's definitely a nice to have, but I think it really kind of taps into issues, right? Because I think people also over value some of these things, and the real gems are the people that are going to be overlooked, right? That's always where the best opportunities are.
Mm-hmm.
And so I find a lot of my really great deals are deals that are being done with founders who just bootstrapped, right? And that to me is the biggest thing. You don't need to have money that early for most startups, right? Like I think there's this misconception that I have to go out and raise $5 million and they go build a product. And that to me is actually scary. When you have $5 million before you have a product,
yeah,
you just, like prove that there's some, product market fit, that there's something you're actually solving that's a real issue. And so anybody can do that, right? You don't need to be Rappi or Clip or Nubank or any of that to go and solve these problems.
Mm-hmm.
You can just solve it, right? You can convince a couple of engineers and yourself to go and build something, go start bootstrapping on the side, get some early results, get some traction. And then when you have that, right, people open up the doors. Everybody gets excited once they see some traction.
Have you guys had to perhaps like not violate the narrative in some regards because of your convictions here in this space, or in these countries? And if so, where does your conviction lie? What is the consensus, and then where does your conviction lie?
What do you mean by that?
Yeah. So, for example, you mentioned that the stereotype is that people in other countries who are not American are somewhat less trustworthy. That's an example. But you're saying actually people here have defrauded me, and people in other countries, in my experience, have been on good behavior, or have defrauded me just the same, or maybe even less. What's another example of something that is the perception that you have to pierce through?
I see.
Yeah.
Yeah, I mean, I think with regard to customer acquisition looks very different in some of these countries.
Mm-hmm.
A specific example, a lot of my companies in emerging markets actually use street sales. So literally go door to door knocking.
Huh.
And that can be very effective if your cost of labor is cheap and you're generally in dense areas where, you literally can go door to door. But in the US, especially in the suburbs, cost of labor is expensive. It's too far to walk door to door, et cetera. So that doesn't work. So I think in the US, like if somebody were to pitch me and say, oh, my customer acquisition strategy is to go door to door to stores, I'd be like, are you insane? Like, this doesn't seem like a good strategy at all. But we have plenty of companies outside the US where this has really worked super well.
Mm-hmm.
And I think that's part of it. Part of it is just like the details of how things work in these other countries are just very different. So it can be so easy to put your American lens on everything else. But I think you have to go back to first principles as to why does this not work in the US, and what is different about these other places such that it either could work or does work.
That's a good one. Ali?
I think there's a lot of stereotypes out there that I think need to be evolved. I think one of the biggest things was just that not just like startups, but that innovation can't happen outside the U.S. And I think we're now seeing more and more cutting edge stuff, more people taking what was done right and advancing it. So it's sort of like with rap, right? Like they have these samples that were done of funk music, and then they made it their own, and they added something to it. It's not the same, and so I feel like that's what we're seeing nowadays, where we're seeing, okay, these people, like when you compare Gojek, and people say like, oh, it's the Uber of Asia, but when you actually look at what Gojek has done and how they've evolved their ecosystem, it's taken what the Uber had done and advanced it in so many different and unique ways, whether they're in payments and they're in delivery and they're in, anything on demand, right? Like it's taken that basic concept and evolved it in a way that I think is really fascinating. And so I think that there's just this bigger opportunity here to like learn from all these different markets at once, right? Like you don't have to look at it as one market or one region. You can look at it as like the whole world is doing like 20 A/B tests on any given space at any given point, right?
Yeah.
So we have crypto banking, and that's being done in all these different markets because everybody wants to have access to US dollars. Or we have, on-demand ride hailing because everybody wants to be able to get around faster. Like these same concepts that are evolving, and then we see which user acquisition strategies work, which retention strategies work, and there's abilities to learn from all of them. And so I think one of the biggest things is like for me has been not being geo-focused and seeing what has evolved in one market and how it might like impact another market.
Yeah, the 20 A/B tests at one time, I'm sure you see some variants of the same idea, either in the same market or like different markets. And that seems like pretty common. If someone wanted to be interested, not get waist deep in the space and start investing, but they're interested in it, what creators or what information sources or media sources do you think have the best signals? Perhaps like the information for emerging markets, or is there a creator you'd like to highlight or shout out that just has incredible content around the spaces?
Actually, I think there's a real opportunity to focus on emerging markets because I can't really think of anybody whom I think is doing this super well.
Mm-hmm.
But I think if somebody were to try to learn as much as they can about, let's say, investing in startups in an emerging market,
mm-hmm.
I think it is helpful to perhaps visit if you've never been, say, outside the US or never been to an emerging market.
Yeah, good first step.
But actually, we even invest in countries where we have literally never been. So I think ultimately we place a lot of faith in our founders and understanding their market and their ability to convey the description of how their market works and the problem, the specific issues and all that.
Mm-hmm.
And so I think just by starting with talking with tons of founders and start, potentially writing small checks just to get your feet wet. Like mm-hmm. I learned so much from my founders and what they're facing as we go along. So maybe start with small checks and then, build up your portfolio and start writing larger checks later.
So currently no media. You're like, oh, it's kind of all over the place. Yeah. The best information source is founders currently. Right?
I mean, I'd be curious if Ali has great sources.
Yeah, absolutely.
You see, if you start to focus on regions, you start to see more people who follow it, right? So there's more news coverage coming out or more opinion pieces coming out. Twitter, I think, has a lot of conversations and a lot of conversations are moving to Twitter, which I think it's becoming less kind of formal media and more of this informal media of blog posts, podcasts, things of that nature. And, when you start to see people on Twitter or on LinkedIn discuss these, different mediums that they're researching, you start to check them out and kind of start to follow down the rabbit hole. So if you don't know where to start, right, you can start with TechCrunch. And TechCrunch is usually going to quote somebody locally for their article. So if you see a big article about an African VC or African startup getting funded, mm-hmm. usually TechCrunch is quoting that from some other piece, right? So then you kind of go figure out what's that other piece, how are they covering things, what other things are they highlighting that, like TechCrunch is going to cover the company that got 30 million. They're not usually covering the company that got 300,000.
Yeah.
But some of these local pieces will. And so if you're really trying to learn what's happening early, then just kind of follow up the rabbit hole until you get to a place that you think is interesting. You do see it in these different markets, and everybody's trying to, get their thoughts out there or share more and help build the ecosystem. So I think that's actually one of the interesting things about a lot of these markets is they're a lot more collaborative than I think what you see in the US as well.
Yeah. So speaking of getting their thoughts out there, I'm going to leave the floor to you if you had something you wanted to shout from the rooftops or say over a megaphone. But before that, I plan to have all these episodes translated to Spanish, French, Japanese, like all these different languages. Because I think the mindset of Silicon Valley is localized to places that speak English. And there might be a kid who's super smart, but he doesn't speak English. And he has access to the internet and access to Stripe, which is in his local language, and all these tools. But like the frameworks or the people he can reach out to for help don't speak his language or her language. And so I'll leave the floor to you.
One more thought on those lines. Actually, there are a number of accelerators in these local markets that could be good to follow. So like Iterative in Southeast Asia or Microtraction in Africa, they would definitely see earlier stuff and allow people, through their demo days or whatever to get a feel for that.
So you have Iterative and Microtraction. Is that what it's called?
Yeah, there are a lot more as well. Those are two that just came to mind, but yeah.
Yeah, they must be pretty good. I mean, it's like shoes, Nike, Adidas. It's like the first thing that bubbles up is usually like noteworthy. Yeah.
And the other thing is that now with Stonks, right, you can kind of go just watch these demo days or even on YouTube and just get access to a bunch of stuff at once. So, in Latin America, you also have, Latitude or Pigma or Platinus or all these things. And so, and most of these people put their demo days out there publicly. They're on YouTube, on their own website or on Stonks. And so just start watching some stuff and seeing what's interesting and seeing what problems are being solved.
Selfishly for myself, I just want to know, I think, is the juice worth the squeeze in terms of translation? Have you found an incredible company, but the founders didn't speak a lick of English, but they had incredible metrics. They're growing really fast. And they transcended. You're able to say, well, it's okay they don't speak. It's like not that big a deal, but the business is doing great. Have you found companies like that, or really unlikely?
So it's hard to get conviction, right, when you're not speaking the same language. But I would say even if people speak English fully, it doesn't necessarily mean they like to consume their media in English, right? Like if you're a native Spanish speaker, even though you went to school and all that sort of stuff, do you really want to watch, your or listen to your podcast in English or in Spanish? Spanish is probably your default, right? I don't know if I'll ever be comfortable enough speaking another language to purposely choose that media over English if I'm not trying to learn, right? So maybe the ones that are trying to learn, but when you're just going for a run on a Saturday morning, you're probably not trying to learn and focus. You're trying to just consume as much information as possible. So I think there's definitely probably value in putting it out in these other languages and just giving it to a broader audience. And then, again, maybe it's not the founders that we're talking about today, but inspiring these kids who are going to be building in 10 years. And so having access to what investors think now and how they're approaching their ecosystems could give them some insight into what additional classes to take or whatever. They're all kind of still learning English in school or in middle school or whatever, but they don't feel comfortable consuming that media. It's cutting them off of this information.
I do actually want to throw out something that is probably sensitive or hairy, which is let's fast forward a few years, and I genuinely believe that there are a lot of founders who are overlooked because they don't speak English. They're not consuming this media. They're not learning about lean startup because that's in English, etc. That being said, I think it's still challenging in fundraising because almost every large investor is still in the US. Even companies in Europe where everybody speaks English, they struggle to raise, even though they even have large investors in Europe because, they're a European entity. So I think there is sort of this capital allocation issue where a lot of, you still benefit tremendously if you speak English from being able to raise money from US investors, especially at the late stages. I think this is starting to be disrupted, but 10 years from now, it will not be fully disrupted such that late stage investing, people still want to go IPO in the US stock market for the most part. There are exceptions, but they're few. There's still a reason why people have to come to the US to raise money, big money.
That's tough. Do you see that changing at all? Do you see?
No, I don't see that changing because think about it, you make money by having good investments. And so it continues to, spin this flywheel within the US. The people who make money are people who are investing in these things in the US. And maybe some of these US investors are now investing outside. Yummy, for example, their largest investor is a US investor. Who is going to make money on that deal if it goes well? Certainly the founders will. They speak English. and their investors who are all American. So like, money begets money. And so it continues to spin that flywheel. I think you start to then see some of that money go into local ecosystems, but many of those people still speak English fluently. And so it's still in pockets in those countries where people are, somewhat US centric or whatever.
Seems like there's a glass ceiling there, and the glass ceiling has all the money.
There is, and that is sort of the unfortunate part, but I don't actually see it really changing anytime soon.
Me neither, especially not in 10 years. Or it's like, do we imagine someone having, Germany having SoftBank level money? Probably not. Or like, probably not.
So I think the more likely thing to happen is actually a lot more people learn English, and or technology helps people learn English, right? Like, so maybe you don't need to actually know English, but we now have a better GPT-3 translation system such that you don't actually need to know how to speak English, but that's how you communicate. I'm not really sure.
Okay.
I'm more bullish on that happening than, local firms becoming huge and dominating.
Yeah, especially because, money, there needs to be track record, and no one's going to, there's like a 80-year track record of U.S. investment firms and maybe way less in other countries. That makes a lot of sense. Okay, going back to the megaphone, what's something that you guys want to put out in the wild besides come pitch Hustle Fund or come pitch First Check? Maybe a concept or something, that a hot take, a maxim, a theory, something out you want to get into the world.
You want to go first, Ali?
All right. I think we're now living in an increasingly globalized society, and I would encourage everybody, like now that a lot of people have opportunities to work remotely and to explore the world, to take advantage of it, and not just going to the same places that everybody else goes to, but really kind of getting a little bit out of your comfort zone. I think when you go and you spend some time in these other markets, you can start to get a better sense of what's actually happening on the ground and the opportunities that exist here, right? And, I think there's a lot of ways that we can make small changes across the world that have a big, huge impact. A lot of the great founders that I'm seeing across the globe actually aren't from the markets that they're starting companies in. There were people that came, they visited, they saw a problem, they teamed up with some local people, they went out and solved it. Right? And so I think that there's opportunities all over the globe, and just staying in the valley and just seeing what the problems are in the valley means you only solve problems that impact like 1% of the richest people in the world. And if instead you go out there and you look at life in Mexico or Guatemala or Nigeria, and you see things that you think need to exist, and you look in the ecosystem and research, you can build something really meaningful. And we're seeing that happen kind of time and time again. So one of the things that I would put out there is as early as you feel comfortable, go out and explore more. Because I think I waited longer than I wish I had, and I wish I'd done this, 7, 8 years earlier. I think it's still good to get some U.S. experience, some U.S. exposure, but going out to see what else could have happened, I could have helped more people, helped more companies, and grown more faster. So I think something I wish somebody had told me.
I'm glad you said that, because I've always had I thought about starting something in these regions just because I've seen so much, and it sounds like the unlock there is partner with someone local. Obviously, like a gringo is not going to start something in Mexico and get the same kind of learning curve as someone who grew up there. Would you say that's right?
I mean, I think it's all like you need to have some knowledge of the local ecosystem, right? Yeah. So I think it's better to partner with local people as well, just to make sure that you're not coming in with some sort of savior complex, but that you're actually solving a real problem, right? Like, it's like the more you can kind of understand the ecosystem, the more your rest of your team understands the ecosystem, the more likely it is that you get to product market fit and that you build something meaningful.
Got it. Was it?
Yeah, I think on a related note, for investors out there, I think investors have a real opportunity to actually make more money in emerging markets. I am a huge believer that actually emerging markets are the way to go for early stage investing. And in particular, when you just sort of think about it, like, what are the opportunity sets in the US? Well, I mean, I think honestly, a lot of things are fairly solved in our daily lives. Like, our payments generally work, and, we have software that generally works, at least in software. I think a lot of things are fairly solved. And so most of the ideas that I see in the US are a bit incremental, to be honest, unless you're doing something crazy like curing cancer or some deep tech idea like launching rocket ships or whatever it is. Like, a lot of software is generally solved. So, and then there are a lot of competitors. So in the US, actually, the landscape may, quote, feel safer, but the opportunity set is not that great. And that can be a good thing, right? Our life is good. In emerging markets, to Ali's point, like, there are a lot of problems to be solved, and there are a lot of seemingly straightforward solutions technology that's already developed. They just need to be done and executed on. And granted, building business is never easy, but if there's a strong problem, then I think that's a lot easier to get behind. Not to mention that there are fewer investors, so the valuations tend to be lower, which means the opportunities tend to be much better. The risk is still the same. I think everyone over-indexes on geographical risk.
Yeah.
But the risk across all markets really is finding product market fit. That's the biggest risk at early stage startups. So I would take geography risk over lack of problem risk any day.
Yeah, and it seems like, because I think I've done 18 angel investments over, I'd say just about half are in emerging markets. And I share how I think about this to pretty much everyone I know. I talk about the China thing, the emerging market to my parents, that framing. I talk about how this tech that's old here, they need there now. And we're just being too snobbish about like the places we're going to and investing in. And I'm like, we don't need 10-minute delivery here in the US. I'm sorry. We really need that. That's just my opinion. And when I say that, like the criticism that I don't have an answer for, my answer to this is we'll tell in time, is like the liquidity risks. Like, you said that these companies, they'll either, you either get liquidity from a secondary, an IPO, or a sale. And there's one big shining case that was bad, which was Paytm. I think they were an Indian company. Like, imagine getting in at $500,000 cap at the seed, or $1 million seed, or whatever, which is great. And then it looks great all the way to the C and B and whatever. Then it gets sold. Stock price tanks. I guess you're happy in the early stage if you sold on the IPO date. But how do you guys reconcile liquidity risk? Because it just seems like we have to wait for, if it's a payments company, for Visa to come along and swoop it up, or Stripe to come along and swoop it up. What other outs do we have, or what other outs do you think investors can think of on this?
But let me push back on that. What do you think are the outs in U.S. companies?
The same thing, but I think there's more companies willing to buy. The M&A teams love, what they're familiar with. But I don't know. That's a broad statement. There may be teams who want to expand in different geos, buy the companies there. But it seems more likely that the M&A teams here would buy a new customer segment in the US as opposed to a new customer segment in X company or X geo. But yeah, I don't know the answer. I just I need a new way to think about it. I think investors need a new way to think about it as well.
So I would push back on that. I don't think that's the case, but the liquidity risk that I do think is there, to be fair, for emerging markets is, in some countries, you don't know what's going to happen at the end. Even let's say it's a blockbuster success, maybe the government of that country is like, okay, well, none of the money can leave the borders. Right? So that is a looming risk. And I think, frankly speaking, we do roll the dice on that one. I don't have any good answers for that one, but that's also why we invest in many different geographies, to try to mitigate all of that risk in one country. But I don't actually think that it is easier to exit in the US at a meaningful exit. Like, okay, maybe there are more opportunities to get your money back at 1x.
Yeah.
But from a portfolio construction perspective, 1x is actually no different than nothing.
Yep.
I would also say that like the way that M&A markets are evolving and the way the IPO markets are evolving, you saw the explosion of SPACs over the last year or 2 years. New public markets are happening. I just think if you build it, they will come, right? If these companies get built up to a point where they're, making hundreds of millions of dollars a year, somebody's going to want to get more access to that capital. Somebody's going to want access to that, right? Because it starts to become more de-risked. So, some market somewhere is going to want that. I don't know what that's going to look like in 5 years or 8 years or 10 years. Maybe we're all saying, oh, in 10 years, instead of listing on NASDAQ, you listed Canada, or you listed something else, or you do a SPAC in Japan. Like, who knows, right? Like there's always these trends that pop up. There's always new opportunities. Private equity companies are, raising bigger and bigger funds. There could be more roll-up strategies. Like liquidity will happen if the company does well. And I feel like that's also like a great problem to have. Like if you're really thinking about it down the future, like, all right, now I have $1 billion company. How do I monetize that? I mean, you got to $1 billion company and you came in at pre-seed.
Yeah.
I'm pretty excited, right? And I'm sure we'll figure out something at that point.
Yeah.
And maybe we get sold for, 900 million instead of $1 billion because we go for a low, because people don't want to, do an M&A in that country or something. But I think there's still going to end up being a huge positive outcome for most of the stuff that we benefit. Yeah,
I think it may even turn out better than we imagine. Something I like from this investor called Avichal Garg, he says like humans aren't really good at thinking in exponents. Like we're just not that good at that. And when all the variable change is happening, like all these people are coming online with mobile, people are funding these sectors, there's just a lot of variable change. And I think we can reconcile that. I came up with this question just now. It's a freestyle, but I like it. When you guys look at a deal, this is a chance for you to call out other investors in the space who really do this, not just kind of passively throw a check in a Nigerian company or a Mexican company, whatever, who gives you a bit of solace and a bit of comfort when you see that name on the cap table. And not to say, and look, first principles, whatever, but it's like after you've done your diligence and you respect the founder, you've underwritten the market, and like you take a look at the cap table and, oh, look, Ollie's there. Oh, look, Elizabeth is there. Who are some other names in the space that you respect in that way?
In emerging markets, I think, one of the things I found is there's no single investor we co-invest with a lot, which is actually really interesting. But that being said, like a handful of people who come to mind first, I mean, certainly we've co-invested with Ali. We've co-invested with RallyCap a bunch. They do fintech infrastructure across many different geographies. Individuals, I've co-invested a lot with Ryan Nesbitt, especially in Africa. We've co-invested with Microtraction a couple times in Africa. We have a couple of investments in LATAM with Latitude. And Angel in LATAM, we've also co-invested with is Clara Diaz Ortiz. So there are a handful of names where we've done a number of co-investments with, but probably share like 2 to 3 companies with each of these people.
Cool.
But I think they all have great taste.
It's all about taste, right? Especially for founders too. Yeah, but keep going, please. Is there any more?
I'm sure there are people I'm forgetting.
It's just, again, it's like Nike. It's like Nike, Adidas. It's just like first 2. Google, Facebook, Amazon. Yeah, it's just somewhere in the top 3. Ollie?
So because I'm usually trying to come in first, I find it that probably more serving as a signal than looking for other signals. That being said, there are companies that have come in after me that I think have been really helpful as well. One of the big things that I tend to look for is just like who else is investing in this person, and then especially like the people that worked with them previously is a big thing for me. So is their boss coming in? Is their boss's boss coming in? What does that look like? I think that's always a big a big signal for me as well.
Got it. Yeah, I guess. Well, I'll hack the question. Who's consistently right after you?
Y Combinator has come into about 1/3 of my pre-seed investments.
Okay, that's a good
so
stat.
they're probably the biggest. But Y Combinator also does 600 companies a batch, so 600 companies a year, right? So they're going to be a pretty active investor no matter what.
Got it. Cool. Guys, I don't have any more questions. If there's more things you want to get onto the ether, now's the time to share them. But I had a ton of fun. I learned a ton. I have a ton of notes here that I have to soak in and download. But Ali, Jamal, Elizabeth, thank you so much.